a sense of what potential, quantify it for us when it comes to the Indian market.
Good morning, all. I think the Indian market has become very strong over the years, especially we see at the luxury and the high-end segments has really taken off. And we see in our hotels outside India, because today we don't have a luxury. The Anantara brand is not in existence at the moment. We're hoping to open our first Anantara in India in July or August this year. But I think the Indian travelers outside India, or the outbound travelers, have been very, very strong for us. And therefore, we see a huge potential in the Indian market, sort of both outbound and inbound in the coming years.
But Dillip, quantify that for us in terms of India's contribution, perhaps 3 to 5 years down the road. How much would the Indian market contribute to revenue, for instance?
I think today we're hoping to have at least, the target is to get at least to 50 hotels in the next 10 years or maybe sooner, based on the growth trajectory we have at the moment. And the Indian market will account for at least about 20% of our annual revenues coming from this segment of the market in the coming years. Today, we see Indian market being one of the strongest markets, especially when it comes to weddings, functions, and also the luxury and the segments, the holidays as well.
You talk about filling the gaps, and by that you mean the luxury or the upper scale hotels. I'm just wondering, are you also looking at maybe, tier 2 cities and beyond?
Yes, we are. We have 8 brands today. So Anantara, which is our top-end luxury hotel, will be in tier 1 cities. And then we have the other brands. We have Avani's, we have NH, which is a European brand, which we acquired in 2018, and also NH Collections and Avani Plus, which will go into tier 2 and tier 3 hotels. We already have a hotel, which is Oaks, under our Oaks Hotels brand, in Bodh Gaya, in the north of India, in Bihar province. And our plan was to create a pilgrimage circuit around that, which is on target as well.
It is a tough market, though, Dillip. We have local brands, the likes of the Taj, for instance. How will you compete? What's your advantage?
I think our advantage is bringing a global brand, which has a very strong distribution globally. And also adding other elements to the experience as well, because the Anantara brand is all about, it's an experiential driven brand. It's all about guest experience. And that's where we excel compared to some of the other brands. And it's not a cookie cutter brand. Each of the hotels is curated based on the local culture, the local architecture, and bringing that concept into the hotel as well, and adding other concepts like wellness, other experiences. F&B, food and beverage, is also one of our key focus as well. So we bring a holistic solution so that the guests can actually enjoy and experience the luxury end of the brand as well.
How are you doing so far? Talk to us about occupancy and the kind of growth you're anticipating.
So far, last year was a record year for us at Minor International. This year is trailing better than last year. So our occupancies are around 65 to 70%. But what we have seen is a massive rate growth. And mainly it's to eradicate or offset some of the other challenges we are facing, like inflation, cost of labor increasing, interest rates going up, and all this. So we have focused on the high-end, top-end quality travelers and focusing on the rates. And therefore, we've seen a very strong year this year.
You've opened an office in Bengaluru as part of the expansion plans. Any plans to perhaps open more offices? And what are you doing in terms of hiring?
Yes, so we've already hired a VP for operations, and we are now planning to beef up our local presence in the market. We already have about 5 or 6 GSOs, or general sales agents, who are looking after the outbound traffic. And our plan is to enhance this both on inbound and outbound. So the next is we will beef up on the commercial side, on the human resource side, and also on the tech services or planning side as well, so that we can actually be providing on the ground experience and be close to the owners as well.
Dillip, of course, Minor, it's a global brand. It is pretty much headquartered in Thailand. Talk to us about how you're doing in Thailand and the rest of Asia.
I think the rest of how we're doing, like we have, as I said, we've had a best year ever. Last year was our best year ever in the history of Minor. And this year, based on what we are seeing, Q1 is going to be better than Q1 last year as well. So we are seeing a very strong growth, especially coming out of Europe. Europe is normally Q1 is always been a soft quarter, but this year it's come up as a very strong quarter. So we hope that this will continue for the rest of the year. And this year we should be beating last year's numbers and making another record in terms of comparing us to some of the other global brands as well, in terms of growth, in terms of pipeline, in terms of some of the rebrandings we have done and some of the new countries we have entered into as well.
What are the plans for the Thai market? I'm just wondering, because this is on the back of a backdrop where there is conflict between the government as well as the Bank of Thailand, and that has hurt investor sentiment. How are you looking at the situation and your own plans for Thailand?
I think Thailand is our home base, so we continue to be bullish about Thailand in spite of some of the external challenges we are facing. But I think I would hope these are temporary measures, and we take a long-term view, and we continue to invest in Thailand. We have quite a few projects coming in Thailand, including some of the high-end luxury residences, which we are doing under the Anantara brand, which also continues to grow quite strongly. We've signed many hotels in Thailand. And therefore, we see Thailand as a very strong market because from a tourism perspective, Thailand will be one of the top 5 tourist destinations. And the government is really promoting the tourism drive in terms of really bringing this destination up to the global market.
Dillip, do you think Thailand needs a rate cut to boost the economy as suggested by the government?
Well, I think it's a monetary policy which the government needs. The thing is, there is pros and cons, because if there is a rate cut, then of course the interest rates become cheaper, and the currency, the investors tend to leave the country as well. But if their interest rates go up, the investors tend to move in, and the money flow actually comes into Thailand. But from our perspective, we have actually insulated ourselves in terms of the rate, which is there at the moment. We operate in more challenging countries compared to Thailand. Like we operate in Argentina, we operate in Cuba and other places as well. So we're quite used to navigating around the monetary policies of each of the countries as well.